Imagine you're driving toward retirement, right?
Yeah.
You are finally ready to just cruise. But the GPS that's guiding your pension checks is, well, it's a full year out of date.
Oh, that's a nightmare.
Right. It keeps telling you to turn left based on this map from 2025, completely ignoring the massive financial roadblocks that are right in front of you today. And if you follow it blindly, you're going to crash into a wall.
You really are. And it's a wall a lot of people don't see coming.
Exactly. Because on July 1st, there is this hidden bureaucratic reset that occurs across the whole Canadian pension system.
Yeah, the July 1st reset.
Because Service Canada uses last year's map to calculate today's income, it's literally steering thousands of seniors into severe financial penalties. So today we are doing a deep dive into this. We're unpacking the Canada Pension Plan, Old Age Security, and the Guaranteed Income Supplement.
Which are the big three, really.
The big three. And we have a very specific mission for you today. Decoding these July 1st rule changes before they permanently cost you money.
Okay, let's unpack this. Why is the national retirement system essentially driving people into a wall just because the calendar flipped to July?
Well, it comes down to the mechanical reality of how massive government databases talk to each other. Or rather, how they don't talk to each other.
Right, they aren't exactly chatting over coffee.
No, exactly.
Yeah.
We tend to imagine the government as this, omniscient digital cloud that instantly registers every single change in our lives. Like, if your income drops on a Tuesday, you assume the government knows by Wednesday.
Because my banking app knows.
Exactly. But the Canada Revenue Agency, the CRA, and Service Canada, which actually administers these benefits, they operate like two separate massive ocean liners. They just do not have a live real-time connection feeding data back and forth millisecond by millisecond.
Oh, wow. Okay, so it's not a live feed at all. Not at all. Tracking the daily or monthly income fluctuations of millions of seniors would require a modern digital infrastructure that, well, it simply isn't there.
So instead of a live feed, they rely on this massive static data dump. They are basically looking at a photograph of your finances from the past to decide what you need to survive right now in the present.
That's a perfect way to put it. A photograph from the past.
So for the benefit cycle running from July 2026 all the way through June 2027, Service Canada defaults to your finalized tax returns from the previous year.
Yes.
They are logging in your 2025 tax data to dictate your 2026 and 2027 reality.
Which means they are essentially saying, whatever you earn in 2025 is exactly what we assume you are earning in the summer of 2026. And they base all your vital support payments on that one assumption.
Which is wild.
It is. And this is where the stakes get incredibly high for the average retiree. If your financial situation has changed, maybe you stopped working, or maybe your investments shifted, Service Canada just does not know.
They are completely blind to it.
Right, because that 1 to 2 year lag exists, real dollars are going to be permanently lost or reduced starting July 1st, unless you take immediate, very specific actions to force the system to look at your current reality.
I mean, that is a massive institutional blind spot. And I think it perfectly illustrates the first major threat on our radar from these sources, which is the old age security clawback.
Oh, yes, the OAS clawback.
We know the general problem is delayed data, but let's look at how this lag specifically punishes middle to higher income seniors through the OAS recovery tax. Looking at the numbers for the July 2026 cycle, based entirely on that 2025 tax snapshot, the OAS clawback threshold kicks in at approximately $93,000 in net individual income.
And I want to jump in here because that individual threshold is a really crucial detail for couples to keep in mind.
Oh, right. Because it's not household.
Exactly. It is not based on your household income. It is strictly about what you, as an individual, reported on line 23600 of your 2025 tax return.
Line 23600, got it. Okay, here is the brutal math of how that clawback actually operates. For every single dollar you earned above that $93,000 threshold in 2025, you are mandated to repay 15 cents of your old age security.
Yep, 15 cents on the dollar.
Let's put a real scenario to that so we can really see it. Say your 2025 net income was $103,000. That puts you exactly $10,000 over the limit.
Right.
So the government takes 15% of that overage, which is $1,500 for the year, divide that by 12, and Service Canada is clawing back $125 from your pension check every single month starting in July.
And that's a noticeable chunk of change for anyone.
But wait, so if I sold an asset last year, like a family cottage or something, or if I just retired and my income dropped massively from $103,000 down to, say, $45,000 since filing my 2025 taxes, am I basically being taxed on phantom income I no longer have?
That is the textbook definition of phantom income, and it is the exact trap this lag creates. The government does not know you retired.
As they're looking at the old map.
Exactly. They don't know that a one-time capital gain from selling a secondary property is no longer padding your bank account. They just see that high number on the 2025 tax return, and their automated system triggers that $125 monthly deduction.
Oh man, that's rough.
It is. You are paying a heavy penalty out of your current reduced cash flow based on money that does not even exist in your current reality.
And from what the sources say, the mechanics of how they enforce this are incredibly aggressive too.
Oh, very much so.
Like if the system flags that you were supposedly overpaid in previous months because of this phantom income spike, they don't send a polite invoice asking you to settle the balance at tax time. They actively withhold funds.
Yes, they just take it.
They will reduce your upcoming OAS checks to claw back the money before you ever even see it. You could be staring at a significantly reduced pension check for months while this recovery plays out. And you're left trying to pay today's grocery bills with a penalized pension.
And if your income genuinely dropped, just sitting back and waiting for the CRA to eventually update Service Canada next year, that is not a viable strategy. You have to step in and manually wrestle the steering wheel away from the automated system.
Okay, so how do you do that?
The first step is logging into your My Service Canada account online. You have to verify which income year they are actively using to calculate your current payment.
Right.
When you see they're using 2025 and your actual income today is drastically lower, you must trigger a formal reassessment.
I was actually digging into how you initiate this manual override, and it turns out there is a highly specific bureaucratic lever you have to pull.
Yes, there is.
You have to request a MOAP benefit reassessment, MOAP. That acronym stands for Meaningful OAS Amount Processing.
Such a bureaucratic name, right?
I know, it feels like bureaucracies intentionally bury these terms to keep people from using them. Meaningful OAS Amount Processing. But essentially, a MOAP reassessment is your official demand that Service Canada base your old age security on your estimated income for the current year, completely bypassing the outdated tax return.
But you have to know the acronym, and you have to file the paperwork.
Right. They will never proactively offer a MOAP to you. You have to know to ask for it.
Exactly. You have to advocate for yourself. Filling out that specific reassessment form is the only way to replace the phantom income with your actual real-world financial picture.
Okay, so the OAS data lag acts like a slow leak. Right. Draining your check by 15 cents on the dollar. That is super frustrating. But for seniors relying on the Guaranteed Income Supplement, the GIS, this same data lag isn't a slow leak. It is a complete shutoff valve.
Yes. The GIS is a fundamentally different landscape. This is a non-taxable benefit specifically designed for lower-income seniors.
These are the folks who really need it.
Exactly. People receiving the GIS are entirely reliant on every single dollar just to keep the lights on and put food on the table. There is no financial cushion here. So for this demographic, the July 1st bureaucratic reset is the single most critical and potentially devastating date of the entire year.
The sheer rigidity of the rules here is startling. We established that the July 2026 benefit cycle is entirely dependent on the 2025 tax return. But if a senior did not file that 2025 return by the April 30th deadline, that July 1st reset triggers a 100% payment suspension.
A total freeze.
Right, not a reduction, not a warning letter.
Yeah.
An absolute freeze on their financial lifeline.
And the mechanism behind that freeze is just pure bureaucratic automation. Without a finalized tax return, Service Canada's system simply cannot calculate eligibility. It's totally blind.
Yeah.
So instead of defaulting to continuity to protect the citizen, the system's default safety protocol is to protect the government's funds. It stops paying entirely until the paperwork is fully processed.
Let's translate that system default into a human reality for a second. A single person receiving the maximum GIS in 2026 is getting over $1,000 a month.
Right.
If they missed the April 30th tax deadline, maybe they were hospitalized, or maybe they just couldn't afford an accountant. Their payment drops to zero on July 1st.
$0.
Even if they scramble and file their taxes in July, and it takes Service Canada just 2 months to process the back pay, that senior has suffered a $2,000 sudden gap in their immediate cash flow.
Which is catastrophic.
You can't exactly tell your landlord or your pharmacy that you will pay them in September because Service Canada is running a batch update. They are either draining whatever meager savings they have left, or they're just going without necessities.
If we connect this to the bigger picture, it highlights a profound flaw in how massive administrative systems interact with our most vulnerable populations.
Oh, totally.
When that payment is suspended or when a payment amount changes, the standard letters the government mails out are incredibly deficient. They tell you like your payment is stopping or your payment is changing.
Yeah, here's your new amount.
Exactly. But they rarely explain the why in plain language, and they almost never tell you the how to fix it. The entire burden of navigating this labyrinth of government bureaucracy is placed squarely on the shoulders of the citizen in crisis.
Which leads us to the most vital lifeline hidden within this entire system. It operates exactly like ordering off a secret menu at an exclusive restaurant.
I love that analogy. It really is a secret menu.
Right, because if a massive life event occurs, say a spouse passes away, or you are forced to stop working due to illness, your income drops instantly. You don't have the luxury of waiting a year or two for the tax system to catch up to your tragedy.
You need the money right then.
You need the guaranteed income supplement right now. And the lifeline exists, but you literally have to know the secret password to unlock it.
The bureaucratic term for this secret menu item is the current year income option. This is a highly specific administrative bypass designed for the GIS, the standard allowance, and the allowance for the survivor.
Okay, the current year income option.
Right. It permits you to discard the lagging tax data and substitute a calculated estimate of your current year's income, allowing the benefits to adjust immediately to your new reality.
But the way you access this is shockingly archaic. You can't just log on to a portal and click a button that says, "My income changed."
Yeah.
The regulations dictate a very rigid process.
Oh, very rigid.
You have to pick up a phone and call Service Canada directly at 1-800-277-9914. You have to verify your social insurance number, and then you have to say these exact words to the agent. I want to apply for the current year income option because my income has changed.
Yes, those exact words.
You also need to have a meticulously calculated 2026 income estimate ready to give them. But why such specific phrasing? Because call center agents follow rigid scripts.
They do. They're just following prompts on a screen.
Right. If you just call and say, "I'm struggling, my husband died, and I have no money," they might just offer sympathy or tell you to wait for your next tax return.
Right.
If you don't say the trigger words, they don't open the right digital workflow.
And the consequences of not knowing that specific phrase are severe. The gap in payments does not always resolve itself automatically down the road.
So you could just lose it permanently.
Exactly. If you fail to assert your right to the current year income option promptly, there are strict limits on retroactivity. In many cases, the money you are legitimately entitled to during those months of hardship is just permanently gone. Passive reliance on a system that defaults to withholding funds is incredibly dangerous.
Man, that is scary. Okay, so we have spent a lot of time on how to protect passive retirement income pensions and supplements from this outdated data trap.
Right.
Now we need to examine the other side of the equation, active income. We are looking at a rapidly growing demographic of seniors who are under the age of 70, who are still working part-time or full-time, and who are already collecting their Canada Pension Plan benefits.
And this is a really interesting shift. The changing rules around the CPP for this specific group are largely tied to the expanded CPT framework that has been slowly phasing in since 2019.
Yeah, the CPP expansion.
The intention behind the expansion is to increase the overall retirement safety net, but it has created a silent trap for working seniors.
It is an autopilot trap. Because of these expanded rules and a mechanism called the Post-Retirement Benefit, or PRB, seniors under 70 who work while collecting CPP are automatically enrolled in further CPP contributions.
Automatically.
The money is just systematically deducted right off their paychecks. But wait, taking mandatory CPP deductions automatically from a 68-year-old's paycheck assumes they want to keep sacrificing current cash to build a slightly bigger pension for their 80s.
That's the assumption the system makes, yes.
But if I am 68 and I am taking a part-time retail job just to cover the skyrocketing cost of groceries today, I don't want a fractionally larger check 10 years from now. I want my full paycheck in my bank account right now.
Of course.
Why is the government making this financial decision for me by default?
What's fascinating here is that the underlying legislation actually agrees with your logic. It recognizes that for a working senior, Continuing to pay into the CPP is a financial decision. It's not a mandatory obligation.
Oh, really?
Yeah. The post-retirement benefit does slowly increase your lifetime pension payout, which is a mathematically sound strategy if you have a family history of extreme longevity and are in perfect health.
Right, if you know you're going to live to be 95.
Exactly. But if immediate cash flow is your priority, or if health issues make your longevity uncertain, those payroll deductions are a terrible return on investment. The government gives you the choice to stop them, but they designed the system as an opt-out mechanism.
So you have to actively stop it.
Yes. The choice to take your money is automatic. The choice to keep your own money requires you to locate the brakes and pull them yourself.
It is the broken GPS again, relentlessly driving you down the default route until you physically wrestle the steering wheel away. So for the working senior who needs their full paycheck today, how do they actually hit the brakes on these automatic CPP deductions?
The mechanical fix for this is surprisingly straightforward once you are aware it exists. You need to locate a specific government document, Form CPT 30.
CPT 30.
You download it directly from the Canada.ca website, you fill out your information, and here's the crucial part. You do not mail this to the CRA or Service Canada.
Wait, really? Who do you give it to?
You hand it directly to your employer's human resources or payroll department.
Oh, wow. So you bypass the government entirely and go straight to the person cutting your check.
Exactly. That form acts as an official legal directive to your employer. It instructs them to immediately cease withholding CPP contributions from your pay.
That's amazing.
And if your financial situation improves later and you decide you want to resume building that post-retirement benefit, you can use the exact same form to revoke your previous election.
So it's a two-way street.
Yes. And by law, your employer is mandated to implement that change within one pay period of receiving the CPT 30 form. The power is entirely in your hands, provided you initiate the paperwork.
It all comes down to knowing exactly which lever to pull in a machine that refuses to operate itself. We have navigated some dense bureaucratic machinery today.
We really have.
We went from the OAS recovery tax to the GIS shutoff valve and the CPP autopilot trap. Let's zoom out from the specific forms and the 1-800 numbers for a minute, because there is an overarching philosophy here about how you must manage your own data in a modern bureaucratic state.
The undeniable through line connecting all these mechanisms is the absolute necessity of relentless self-advocacy.
Yes, self-advocacy.
The system is built on assumptions and delays. You have to be the one injecting current reality into it.
So what does this all mean? It means the system doesn't come looking for you. You have to go to it. Let's do a rapid-fire recap to lock in the actionable steps from today's deep dive.
Good idea.
First, verify that your 2025 tax return was finalized by checking your CRA My Account online. That protects your GIS from suspension.
Crucial first step.
Second, log into My Service Canada to verify the income year driving your OAS. If it is an outdated snapshot and your income is dropped, file for a MOAP reassessment immediately.
Right. Meaningful OAS amount processing.
Third, if a life event severely cuts your income and you rely on the GIS, bypass the delay with the secret menu. Call 1-800-277-9914 and invoke the current year income option.
Use those exact words.
And fourth, if you are working under 70 and need your whole paycheck today, wield Form CPT 30 and hand it to your employer to stop the CPP auto deductions. The only thing standing between you and the money you're entitled to is picking up the phone or submitting the correct form before that July 1st deadline.
This raises an important question, one that is worth reflecting on as you look at your own retirement strategy.
Yeah.
We operate daily in a world where technology moves at the speed of light. Your banking apps process transfers instantly. Your streaming services update your preferences in milliseconds. If you change your shipping address online, it doesn't take a full calendar year to process the update. Yet, the critical social safety net, the very digital infrastructure designed to keep vulnerable seniors out of poverty and manage lifetime pensions, intentionally relies on a rigid 1 to 2 year data delay.
Wow, yeah. It feels distinctly calculated. You don't see this kind of lag when the government wants to collect taxes from you, only when they are scheduled to pay you.
And it forces us to examine the nature of the machinery. Is this massive bureaucratic lag merely an artifact of archaic technology? Are we just dealing with clunky 1990s batch processing mainframes that haven't been upgraded?
Or is this something else?
Exactly. Or is this delay a silent, systemic feature, a structural design choice that holds on to billions in government funds just a little bit longer before distributing them to citizens?
That's a chilling thought.
Because whether this lag exists by technological accident or by quiet design, the operational result is identical. The system defaults to keeping the money unless the citizen knows the exact bureaucratic password to ask for it back.
That is a heavy, essential thought to carry with you. It makes you wonder who ultimately benefits when the map never quite matches the road. Because as we have learned today, if you trust a broken GPS without ever looking out the windshield yourself, you are the only one left paying for the crash.